Been pre-approved for a USDA loan, but keep finding homes that need TLC? You're not alone. And the good news is you may not need to walk away from those homes at all. Hi, I'm John Thomas, a USDA and renovation loan specialist with Primary Residential Mortgage. I work with buyers all across the country who think USDA loans only work for perfect move-in ready homes. And that's not always true. We've got a USDA renovation loan. With a USDA renovation loan, it lets you buy a home and roll the renovation costs into one single mortgage. So one loan, one closing, one monthly payment. It's a 30-year fixed rate loan for owner-occupied single-family homes. Most borrowers would need a minimum 620 credit score to apply. There are two types of USDA renovation loans, a USDA limited renovation and a USDA standard renovation. Now let's break down each one of these. The USDA limited renovation loan is for homes that are livable at closing. It allows up to $35,000 in non-structural repairs. There is no minimum repair amount. The home must be habitable when you close. Now, there are no mortgage payment reserves during construction, and renovation funds are released in one final draw after all the work is completed. This works well for things like kitchens, bathrooms, flooring, siding, and general repairs. Now, the USDA standard renovation is if the repairs are structural or exceed the $35,000 limit. This option allows structural and non-structural repairs. No repair dollar cap except for the max loan amount. If the home isn't livable, you may include up to 6 months of mortgage payment reserves. Funds are released through up to 5 draws as the work is completed and inspected. Now, the core requirements for the USDA loan, no matter which option you use, minimum 620 credit score. The home must be your primary residence. It can only be a 1-unit property, and you can only get a 30-year fixed rate mortgage. Manufactured homes and condos are not allowed. Now, what are the eligible repairs? USDA renovation loans are for practical improvements, not luxury. Eligible repairs include health and safety issues, accessibility improvements, septic systems and wells, additions and structural changes, attached or detached garage, kitchens, bath, flooring, siding, energy efficient upgrades, repair to existing pools, auxiliary dwelling repairs. Now, what's not eligible? New in-ground pools or manufactured homes or condos, converting barns or schools into homes, including income-producing features, outdoor kitchens or luxury upgrades, common areas where the foundation is demolished. Now, you may need a HUD consultant. Depending on the project, a HUD-approved consultant may be required. For a limited renovation, it's optional, but for a standard renovation, it may be required by the lender. The consultant prepares a detailed work write-up that contractors must follow. Now, how are the funds released? Renovation funds are not paid up front. Limited renovation uses one final payment with an initial draw up to 50%. Standard renovation allows up to 5 draws. Each draw requires an inspection. A 10% holdback applies to each draw. Funds are held in escrow, and any interest earned reduces your loan balance. Now, who can qualify for a renovation loan? Eligible borrowers include U.S. citizens and permanent residents. Borrowers can use power of attorney or in drito vio's revocable trust. You still may need to meet USDA. You'll still need to meet USDA income and property eligibility. So who's this loan ideal for? If you're finding fixer-uppers in the USDA eligible areas, you want one loan instead of 2, you don't want to drain savings for repairs, and you're okay with structured renovation process, then this is the loan for you. So if you're already approved for a USDA loan or thinking about it and tired of passing on homes that need work, then a USDA renovation loan is your solution. So reach out to me, John Thomas, at 302-703-0727, or you can catch me online. If this video helped, please like and subscribe, and I'll see you at the next one.